Nick Mueller from Stewart-Peterson is our marketing analyst this week. On Tuesday, the USDA released its latest numbers on world supply and demand. The agency lowered soybean ending stocks from 170 million bushels to 150 million bushels. It also lowered corn ending stocks by 95 million bushels. Both projections were within the range of trade estimates. We talked with Nick Thursday morning about corn and soybean selling strategies, as well as the latest USDA report.
Well, at least we're eating into some ending stocks and it's moving the right way. But with corn, the ending stocks are just too high to make a difference. The report wasn't bullish enough to push either of those markets above resistance, hence we got a correction the rest of the week.
Do you think January could be a surprise at all?
January could.
Yeah.
Right now, though, I feel the market is just tired and we drift lower into the holidays. Possibly after January 1st, we could get some life. We could get some acreage battle going on.
Can you get a sense of the average farmer, maybe how much grain is still left in the bin, how much they're storing right now?
I think a good amount. I mean, over the past 5 years, we've been building up farm storage, and we have great capacity there. So what had to come out went to market already and suppressed prices as far as that's concerned. And I think the market's going to have to work either through futures price or maybe just through basis to get some of that grain released.
Is there a magic number you think people are holding out for, or do you think they're just holding and waiting?
I think they're just holding and waiting.
Yeah.
I do think that magic number exists. If March beans have put in their low, which hopefully they have, maybe they'll test a new low yet here going into the holidays. I think you can target that 470 to 475 range pretty realistically to get some grain moved.
Let's go through a few topics here. Let's start in corn. Reports again this week that China rejected another boat here of U.S. corn. What's the end game here? I mean, is this a big point we should be paying attention to?
I think it's just another bit of bearish news to weigh on this market. I do not think it's a big long-term effect. Some of that corn will be moved out of China, obviously, and ultimately the strands that they're having trouble with, I think, will ultimately be approved in the spring. To their benefit and to ours.
Yeah, exactly. That's a good point. What about ethanol? Do you think ethanol has positioned itself well going into 2014? It had some turmoil this year, obviously.
I think ethanol is in great position to continue to be a great user of corn. What we've lost in ethanol over the past 3 years is its growth factor in corn. Prior to that, any excess stocks we built up, ethanol was a growing, booming business that was able to eat in those excess stocks. Right now, the ethanol market will continue to be a great consumer, but will be flat. So we don't have that growth factor unless, 5 years from now, we're able to export a lot of ethanol. Then maybe we see some growth in that capacity again.
Let's talk about the export market in soybeans. China's obviously a huge buyer, but is there a window here of 2 or 3 months before that big crop from South America comes in and becomes a bit cheaper?
Absolutely. I think Monday, not being able to push through resistance on the report gave us a near-term high with a drifting lower into the holidays. I still think there's a chance after the first of the year we possibly challenge one new high, but you're taking on quite a bit of risk to store that for probably what could only be an additional 25 to 30 cents. And that window gets pretty small. I would say by early February to February 15th, any old crop beans have to be moved because once the end user knows not that it's getting beans out of South America, but from a month from now they can. We lose a lot of that premium that's built into our market.
Okay, I'll ask for selling strategies now. You gave me a hint of beans, but give me corn and bean. This is old crop, we're talking selling strategies.
Old crop and corn, again, anything under this near-term resistance off of March, 433, if you don't, if you're in commercial storage and don't want to start extending that storage, that's probably where you have to move it. Other than that, after the first of the year, my target, again, 470 to 475 off of the March contract if you're going to store it. Beans, I like pretty much, selling into this, little bounces. We took 20 cents off today. We get that 15, 20 cents back. I mean, that's pretty much you're right at resistance now. That's where I would like moving some more.
You look forward to 2014, and let's just talk about acres for a second. Obviously, we're early, but some farmers probably have their seed bought. Do you think there's less gamesmanship maybe this year than there was last year when it seemed like a lot of farmers loaded up on corn to try and overflow the market?
I agree with you. I think right now you have people shifting back to 50-50 for a number of reasons. One is the yields of corn on corn haven't been there. So, we're starting to see, some of those corn. There's a lot of corn acres that have been ready for a year or two to go back to beans. And right now, when you look at the profitability of beans per acre, it makes sense to be planting beans. But now that only works if you're locking in the current price, right? Because through the spring time, we're going to see, corn probably try to buy some acres back, or beans will fall enough to, for corn to buy some acres back. So if you're thinking I'm going to plant more beans, it's more profitable per acre. I agree with that. But you need to be doing something to reward November 14 bean prices right now.
Have you missed the window if you're trying to contract that new crop?
I don't believe so. As far as beans, I like the price right now. I think we could get a little higher in the spring. As far as corn, we were lucky enough to get some locked in early on. So if you don't have anything done, I'm being a little more patient. But obviously, we have a large amount of producers we work with nothing done. I think, your audience as well might have a lot of producers with nothing done. So what I'm trying to remind myself and my clients is historically, this is a terrible time to be forward contracting corn for next year. So initial target, I think you can target about that 475 to 480 window to get started. If I'm dead wrong and we just slide after the first of the year and keep sliding, I still think you'll have another chance at some point to get some 450 corn locked in. So,
do you have any concerns about profitability for the 2014 crop?
I have huge concerns about profitability. Our market scenario planning and us telling producers they need to know their weighted average price and how market moves affect that weighted average price are more important than ever now. The message we've been passing along here for 5 years is finally getting some reception because it is so important to make sure we're profitable for 14 as well as 15. I mean, we're getting aggressive out in 15. Those are my biggest concerns those next 2 years. If prices stay suppressed over that 2-year period, hopefully we will see some input costs, over time come down. But there's really a lot of risk in 14 right now and probably some risk in 15.